So you're telling me a $20 billion combined flavor empire is less interesting than Biogen overpaying for Apellis?
Overpaying? $41 a share is an absolute steal for that nephrology pipeline. 5.6 billion in all cash shows serious conviction.
It shows desperation. They need growth and they need it yesterday. But fine, we can argue about Biogen's immunology pivot first.
Oh, we will, and then I need you to explain how McCormick plans to legally monopolize my entire spice rack. The rundown.
$33.4 billion for an infrastructure play. I had to refresh the terminal twice this morning to make sure I wasn't seeing a typo.
Global Infrastructure Partners and EQT teaming up for AES Corp is exactly the kind of megadeal bankers have been praying for. The financing conditions finally thawed, and boom, we get a massive public-to-private transaction.
Thod is doing a lot of heavy lifting there, Nate. Sure, the debt markets are friendlier than last year, but you still have to syndicate $30+ billion in a volatile geopolitical climate.
They will get it done. The appetite for infrastructure is just insatiable right now. Speaking of insatiable appetites, we need to talk about the new spice rack monopoly.
McCormick and Unilever's food business combining, a $20 billion projected revenue global flavor powerhouse. I read the press release and immediately felt bad for whoever has to draft the Hart-Scott-Rodino filing.
Oh, come on, it is just mayonnaise and paprika?
It is $20 billion of market share in grocery aisles where margins are already razor thin. The antitrust watchdogs are going to scrutinize every single jar of garlic powder before they let this close.
Fair, but strategically, it is brilliant. Scale is the only way to survive in consumer packaged goods. Let's keep moving. Carlyle is taking a majority stake in MAI Capital Management, valuing the firm at over $2.8 billion.
Classic wealth management roll-up play. Boring but highly profitable. Much more interesting is Primoris dropping $422 million in all cash for PayneCrest Electric.
Because everything is a data center play now. You buy an electrical contractor, you get instant exposure to the AI infrastructure build-out. It is a smart backdoor way to play the boom.
Agreed. That one actually makes strategic sense, unlike the gossip I am hearing about Crown Reserve.
Ah yes, the SPAC merger.
Please tell me we are not doing SPACs again. Crown Reserve is trying to push a $1 billion merger with Carvix. I thought we collectively agreed to leave blank check companies in 2021.
I strongly disagree. SPACs never died, they just got quieter. If the sponsors actually structure them right and the target has real cash flow, it is a perfectly viable vehicle in this financing environment.
A viable vehicle for fees, maybe. Show me the sponsor promote and I will show you who actually makes money on that deal. It is never the retail investor.
We can fight about SPACs later. We need to talk about the real shocker of the morning. Biogen just dropped $5.6 billion in cash to buy Apellis Pharmaceuticals.
$41 a share. It is a massive swing in the immunology and rare disease space. But if you read the footnotes on their nephrology pipeline, you start to see exactly why they paid that premium. The big one. $41 a share. All cash. $5.6 billion just to buy your way into nephrology.
It's a massive check. But Maya, look at Biogen right now. They need this.
Need is doing a lot of heavy lifting in that sentence.
Come on, they do. Their Alzheimer's franchise is a slow burn. The spinal muscular atrophy market is completely saturated. Apellis hands them a ready-made growth engine in rare diseases. It's textbook portfolio management.
It's textbook panic buying. I was reading through the strategic rationale this morning, and half of it reads like a company trying to convince itself this makes sense. $5.6 billion in cash. They're draining the war chest because they missed the boat on organic pipeline development.
See, my old banker brain looks at this and sees a beautiful, clean transaction. All cash means they're confident. Improved financing conditions across the market mean cash is king again. Analysts are already calling this the return of the healthcare megadeal.
Just because the financing is there doesn't mean you have to spend it.
It does if your investors are screaming for a growth story. Look, Apellis has the first FDA-approved treatment for geographic atrophy. It's a huge market. Biogen is essentially buying a monopoly in a niche space.
A niche space with massive execution risks. Apellis had safety concerns with their eye drug last year. Remember the vasculitis reports in the footnotes? The stock took a beating. Biogen is paying a massive premium on a stock that was already highly volatile.
Which is exactly why $41 a share got it done. The board at Apellis looked at the geopolitical volatility, looked at the execution risk you just mentioned, and said, we'll take the $5.6 billion. Thank you very much.
I don't blame Apellis. If I'm the Apellis CEO, I'm popping champagne today. I'm just looking at Biogen and seeing a midlife crisis.
Buying a rare disease company is the biotech equivalent of buying a red Porsche.
Exactly. Only the Porsche doesn't need FDA approval to drive off the lot.
Fair point. But you have to admit, the broader M&A landscape is eating this up. We're seeing mega deals everywhere right now. Global Infrastructure Partners and EQT just teamed up for a staggering $33.4 billion buyout of AES.
Right. The infrastructure play. And don't forget the quiet return of the blank check. I saw the filings for Crown Reserve SPAC merging with Carvix. A cool $1 billion.
I heard the whispers on that one. SPACs are trying to sneak back through the side door while everyone is distracted by these massive public-to-private buyouts.
It's wild. Private equity is hoarding assets left and right. Carlyle just took a majority stake in MAI Capital, valuing them over $2.8 billion. The money is absolutely flowing again.
Well, when financing gets cheaper, the checkbooks come out. And speaking of massive checkbooks, I cannot stop thinking about this $20 billion combination hitting the tape.
You mean the one that is literally going to change how the entire world tastes its food?
That's the one, McCormick and Unilever. I'm hungry just thinking about the antitrust filings. Voices. So I'm reading this note from one of the big banks this morning, and they're claiming private equity is pivoting hard to public-to-private deals just to grab AI assets.
I saw that note. I think they're confusing a trend with a buzzword.
Oh, come on. You don't think the competition for AI is driving these take-privates?
I think slapping the letters A and I on a deal thesis is how you get your investment committee to stop asking hard questions. Look at the actual mega deals happening right now. It's healthcare, it's energy, it's not all just machine learning.
Fair, but the financing conditions have definitely thawed. That's the real story. Look at Global Infrastructure Partners and EQT teaming up for AES Corp. $33.4 billion. You don't pull off a $33 billion infrastructure play if debt is still frozen.
Sure, the debt markets are waking up, but I'm reading the footnotes on some of this stuff, and it feels like the zero interest rate days all over again. Have you heard the whispers about Crown Reserve?
The SPAC? Don't tell me.
A $1 billion merger with Carvix. Blank check companies are crawling out of the grave.
Okay, a SPAC comeback is my actual nightmare. I spent 3 years trying to forget the phrase de-SPAC transaction.
Get ready to learn it again. But honestly, if we're talking about massive deals driven by pure market dominance rather than tech hype, we need to talk about what's happening in the grocery aisle.
The great flavor monopoly.
Exactly. I want to look at the regulatory filings on this $20 billion McCormick and Unilever combination next, because the antitrust watchdogs are absolutely going to have feelings about it. Spill the tea.
I am telling you, the blank check is crawling out of the grave. Crown Reserve is merging with Carvix for $1 billion, just when you thought the SPAC was safely buried.
Oh, come on. One zombie SPAC does not make a renaissance. $1 billion is a rounding error compared to the garbage we saw in 2021. You are just getting nostalgic for the bubble.
I am not nostalgic. Okay, maybe a little bit for the fees, but you cannot deny the financing environment has shifted. Dealmakers are whispering about a massive wave of take-privates. Look at the cross-border megadeals dropping this week despite everyone panicking about geopolitics.
I am looking at the data, and the real money is flowing to actual physical assets, not shell companies. Global Infrastructure Partners and EQT are teaming up for a $33.4 billion buyout of AES. That is real power and infrastructure.
True, but private equity is also quietly hunting. They are pivoting to public-to-private plays just to grab AI assets away from public market scrutiny.
I will believe the AI take-private wave when I see the SEC filings. Right now, capital is hiding in boring, safe assets. Primoris just bought PayneCrest for $422 million in all cash just to get data center exposure. Or, if you want real safety, you buy condiments.
Wait, condiments?
McCormick is combining with Unilever Foods to build a $20 billion flavor empire.
A flavor empire. I love that. I want to be a flavor emperor. Though I bet antitrust watchdogs are going to have a field day with a $20 billion spice monopoly.
Oh, absolutely. Keep an eye on those regulatory filings tomorrow. But if we are talking about aggressive all-cash plays today, the biggest splash is not in spices or zombie SPACs. It is in rare diseases.
$5.6 billion in all cash. I guess we need to talk about Biogen. Tomorrow's radar. I am clearing my entire morning for the McCormick and Unilever Foods filings. $20 billion of pure flavor empire.
You just want to see if antitrust regulators actually care about a global monopoly on garlic powder.
Hey, seasoning pricing power is real. The FTC is absolutely going to scrutinize this. You cannot just corner the market on paprika and expect Washington to look the other way.
Oh, come on. They are not cornering paprika. The actual market share overlap is mostly in industrial flavorings, not the grocery store spice aisle. Read the preliminary disclosures.
I'm a big picture guy, Maya. The picture is a $20 billion spice rack.
Right. Also on the radar tomorrow, Worthington Steel should be posting closing updates on the Kleckner acquisition. They just squeaked past the minimum acceptance threshold.
Squeaked is the operative word. But a win is a win for the industrial's desk.
We will see if the final numbers hold up when the market opens. Keep reading the footnotes, everyone.